I want to tell you about a very bad day that I had. There was a day that I lost $70,000 in one day when my total net worth was about $200,000. Now, this story involves a lot of very personal feelings. I'm going to leave it up here until I decide maybe to take it down, but it's something that I think could be helpful to someone who has lost some money or is maybe looking at, should I do investments if I have a loss, or how do I evaluate that? So I want to share the story with you and just give you a quick background. I was wearing my medical scrubs. My background is medical device sales. And I remember coming out to my car after a medical procedure from the hospital and sitting there, and I had my laptop open, and I had the revelation that the stock market had closed and I'd lost $70,000 in one day. And I'd been using this complex options trading strategy called an iron condor strategy. And I don't know, maybe animals are in your options trading strategy, maybe it's more risky, but basically I had made some money for a few months and then I lost a whole bunch of money, but I felt like such a failure. I felt so discouraged, I felt ashamed. You can imagine how you felt, how you feel if you lost $70,000, what you'd say to your friends or to your spouse. So that's exactly what I was feeling. And I want to share from this experience really my three biggest takeaways that I think there'll be a lot of value in, and I'm going to share a great quote for you at the end. So stick around. All right, so as we jump into it, losing money is not something that's uncommon. People lose money all the time in deals, investments, stock market, all kinds of things, but it's something, and it's not something we should completely shy away from. Now, Warren Buffett does have this saying, and I talk a lot about Warren Buffett because he's an amazing investor, but he says rule number one of investing is don't lose money. And it's so important that rule number two is don't forget about rule number one. So you do want to try to minimize your downside as much as you can, but it can be very educational. There can be a lot of learning when you lose money. This story comes to mind where I was at a meetup before I ran a meetup in Pasadena. I was at a meetup in the area, and there were two people there. One was Christina Suter, who is a friend and mentor of mine, and also Jay Massey, who is very successful at short-term rentals and done a lot of great things. And Jay was speaking, and they were going around, they were talking, and Jay sticks up his hand. He says, how many of you have lost more than $50,000 in real estate? And there's like 50 people there, and maybe like 5 or 10 hands go up. And he says, okay, how many of you lost more than 100,000? Whatever, and a few less, a few hands go down. How many lost more than 250,000? A few more hands are still up. And then he says, how many of you lost more than $1 million in a real estate deal? Whatever. And his hand was up, and Christina's hand was up. And I know both of them are uber wealthy and successful. But again, I think what, the thing that he drew from that is that it's not wasted if we learn from it. Right? Now, nobody wants to lose $1 million, but if we learn from it, it becomes incredibly valuable. So what did I learn? I had a $70,000 educational mistake, right? I learned something, and what I learned is I am not a good options trader, right? There are people that are engineers, or they do other things. Actually, I don't know too many people that really make a lot of money consistently in options. So, again, it's kind of hard to win in that way, but I learned that's not my best seat. Now, I tried something else. I tried working on deals like this, where I've been able to 20x my net worth just over a period of 4 years, right? So I learned really what I'm good at. I'm good at creating content like this. I'm good at connecting with individuals and really analyzing real estate deals, and that's what I'm good at. So losing money really can give information. Okay, so the second thing really is to minimize your downside risk, right? Warren Buffett says, don't lose money, right? That's so important. So I had made, in this particular options trading deal, I had made $20,000 over a period of 3 or 4 months. So I thought, oh, this is awesome. I'm just going to keep making money, But I didn't see really how I could lose $70,000, which was the max amount that you could lose in this deal. And I lost it, right? So I didn't really see it. So there's this great book by Manish Prabhai, who's also a kind of a disciple of Warren Buffett, but it's called The Dondo Investor. And he basically talks about the strategy where he says, heads I win and tails I don't lose much. So that's an asymmetric return, right? It's basically saying that, if this happens and if it goes according to plan, I'm gonna make a ton of money. And if it doesn't go well, it's not gonna be too bad. And in multifamily investing, I love that because we'll have deals typically will project 14 to 16%. They usually perform at or about. Best case scenario, we've seen some that 90% IRR in a year. And obviously there's a range, but the worst deals that I've seen, I haven't been a part of these deals, but I've seen are about 8 to 10% per year, right? So you have a limited downside, but you have a lot more upside, especially with inflation. There is that ability to, heads I win, tails I don't lose much. So really it's important to ask in any investment, in any strategy, that you ask, what is the downside for this investment and what's the likelihood of that outcome? So if it's a 90% chance you're gonna 100x your money, but it's a 10% chance you're gonna go to zero, that's a lot of risk. So maybe don't put all your money in that investment, right? So you have to consider just what is the downside, what's the likelihood of that. And I love the idea of trying low risk experiments. So again, another way to do a low-risk experiment is to invest your time, to go to events, to go to meetups, to read, to learn, all this stuff. Huge, huge return, very, very low investment. Now, I wanted to say something about this. I do panels often with just amazing people. We do these monthly panels. I had one with George Gammon and Mark Moss, who are very, very smart guys. And I kind of asked them this question: what should individuals be investing? What should they be doing? And they both said something very similar. They said, you really should invest or be focused on an area where you have an edge. And what that means is something you're either really good at or something that you have a connection or inside track for. Now, I didn't have an edge, even though I thought I did. I didn't have an edge in options trading, right? Even though I'd made money for a few months, I wasn't really good at that. There's very few people that I know that are really good at options trading that have been able to make a lot of money for a period of time. So for me, I did realize doing deals like this, multifamily deals, I have an edge there. I'm really good at it. I'm good at analyzing deals. I'm good at being a part of the management team. I'm good at raising money and working with investors and doing videos like this to educate on it. That's what I'm really good at, right? If you don't know what your superpower is, if you don't know what you're good at, then just go out and try to find out what sort of deals or people do you have access to. Go to events, connect with people. Really, like I talked about, low downside risk, just invest your time and figure out what could work for you. Also, if you invest in deals, you might find that you have something you could add of value to be a part of that. But it is important to have an edge, especially in this day where things are changing very, very fast in the economy, inflation, all types of stuff going on. It's important to continue to educate yourself. And that's what you're doing here, so well done for that. I wanted to share this quote with you. It's a great quote. It's kind of funny, but it's from Matt Damon from Rounders, the movie Rounders, which is the poker movie. And he says this, he says, if you can't spot the sucker in the first half hour at the table, then you are the sucker, right? So I've been the sucker. I don't know, maybe you've been the sucker too, but it's important that whatever game you're playing, you understand, do I have an edge here or am I the sucker, right? So if you're the sucker, or if you've lost money, you just learn from it and don't judge yourself, but move on. Really, really important. If you're interested, on another note, on learning how to pay zero taxes legally, which it is possible, check out this video up here. Very compelling. I think you'll really like it. Just some really cool stuff there. And if you haven't joined our investment club, you're not hearing about our awesome deals that we're doing. We really are seeing an edge. We're getting off-market deals. We're getting phenomenal returns for our investors and helping to save on taxes and all kinds of things. You can click the link below in the description or go to bronsonequity.com. We look forward to developing a relationship with you. But thanks for taking the time to educate yourself. Look forward to seeing you on the next video.